Trainer William. Today we are going to learn about the topic on fundamentals of accounting, and we are going to major in the topic Introduction to Accounting. I know basically all of you know about what accounting is, what is all about accounting, and where it is being used. So we shall begin by the end of this session. All of you shall be able to define the term accounting and state and explain or discuss the principles of accounting. That's majorly very important to know where accounting is being used, who are the users of accounting, the concept of accounting, and the nature of accounting. That's a good thing to know, and that's what I'd like you at the end of this session should be able to cite and explain what is accounting, the users of accounting, the principles of accounting. That's all. Or could you be in a position to explain your general knowledge on accounting? Anyone in the class to give us a general knowledge on what accounting is? Michael, I can hear you. Yes, I'd like you to explain on your general general knowledge about accounting.
Yes, accounting for me it's an act of recording a transaction. It deals with the accounting equation where you have assets, where you have capital and liabilities that are essentially the transactions that take place around a business establishment. Over to you.
Okay, thank you. Your network was cutting off a little bit, but it's okay. You have heard everything. Yes, he has defined accounting very well, and that's the general view of accounting. Now, let I take you to the definition of accounting. Accounting is the procedure of data entry and recording, summarizing, analyzing, and then reporting. The data relates to the financial transaction of the business and the corporations that are being undertaken to the accounting. This data relates to the financial transaction of a business and the corporation. The operations of this entity over an accounting period, generally a year, or keys to prepare financial statement. These transactions generally are prepared on a yearly basis in the so many entities and businesses, including schools. They produce this financial transaction on a yearly basis. This happens where all the accounting officers and managerial officers are able to produce a financial statement, either a balance sheet, a profit and loss account, or a trial balance to the entity or to the users of this accounting. Everything should be done in a procedural manner such that the outsiders, the investors, the suppliers, or the employees of the company should be able to use that financial statement to make decisions. Also, the management is in a position to use that information to make decisions.
Excuse me, sir.
Hello, Michael.
Can you hear me? Kindly, I was requesting that you increase the font size of the slides.
Yes.
If you can increase the magnification a little bit.
Okay.
So that we are able to see clearly the last slide and this slide as we go ahead.
Is it okay now?
Yes, now I can see it clearly.
Okay.
Clear, it's now very clear.
Okay, thank you for that correction. Thank you. Yes, we are done with the definition of accounting, and now I'd like to take you through the principles of accounting. What governs accounting information and accounting transactions? I'd like to cover the first principle, where it is the revenue recognition principle. When covering on the accounting transaction and information, you should be able to cite how revenue is recognized inside the books of account. For example, the balance sheet, the profit and loss account, and the trial balance. This helps when making a decision on a management basis, where they should make a decision on whether to take a step, or whether to keep doing what they are doing, basis on what if they are making profit or loss. According to this principle, the revenue recognition happens at the time of execution of the transaction. When transactions are being executed or transactions are being captured, this is the time that the revenue recognition principle comes in. It is also irrespective whether the payment of cash is received or not. This is all about the revenue recognition principle. The other principle is the historical cost. Basically, this deals with the originality of the cost incurred, where it originally happened. The principle directs that all the assets will be reported at the actual cost of acquisition, when they were acquired, when they were bought, before, or when the company was being started or built. It is not at its current market value. You can't cite the cost of the product with its current market value, whether it has appreciated or depreciated. You must cost it on its historical cost. When doing the balance sheets, in the place of fixed assets, you must cite the cost when the asset was being purchased, and you less the depreciation of that period. Then you get the marked, or the price, the current price of the item. There is also an exception to this rule of highly marketable securities. We move to the next principle, which is the matching principle, where you match the income earned during an accounting period is compared with the corresponding expenditure. That is well known, unless you have any question regarding to that principle. I'll move to the next principle, the full disclosure principle. This principle says that an entity's book of accounts should fully disclose all the relevant information to its users. It should disclose all the information to the users. To expound on this statement, whereby all the financial transactions captured in the balance sheet, the profit and loss account, and the trial balance, all the information should be well disclosed. The purchasing date, the selling date, and all the losses made and the profit made. That's all about the definition of accounting and the principles of accounting. I'd now like to take you through the summary of the lesson, whereby we have learned about accounting, the meaning of accounting, and the principles of accounting. Class, we would like you to remind us or cite for us what's the meaning of accounting, what you have understood by the meaning of accounting. Anyone?
Yes, sir. Well, I
can't hear you well, Mike. Come again.
Can you hear me?
No, not unless you don't have a good network. Who is that? Who is there?
Network is just getting closer. Can you hear me now? Can you hear me now?
Not quite well.
Yes, my name is Michael. Now I know you can hear me.
Yes, yes, I can hear you.
Now, my understanding of accounting is the process of collecting, analyzing, summarizing, and interpreting accounting data to give it meaning, or to give meaning of the information of the data to the users of the accounting information.
Yeah, well, that's the full definition. Thank you, Michael. That's the full definition of accounting, and he has cited it very well. That is a procedure of collecting data, analyzing data, and capturing and keeping it to the books of accounts. To summarize on this topic, I'd like you to also to cite some principles of accounting.
Yes, can I answer? This is Anthony.
Yeah, answer that.
Well, I think we have I can remember too, there is the matching principle and the historical cost principle of accounting.
Yes, you can remember those ones. There's also the full disclosure principle and the revenue recognition principle. To add on this, I'd like you to go to do a takeaway cards in groups of 5 members. You should discuss the categories of accounting. The assignment is worth 20 marks, and it will be submitted on 15th of November 2021 this year. I'd like you to present a printed work, and I'll forward it to my office before that day. Thank you, and enjoy your weekend.
Thank you, sir.